New and used car prices are finally starting to crash. We're seeing rates that are down almost what pre-pandemic levels exposed. And as well, we're seeing as much as 20.4% down from the year before. Yes, used cars and new car prices have taken a nosedive in recent months, with consumers at the end of their rope trying to pay for food, housing, as well as the general cost of living, with consumer debt, credit cards, as well as we can't forget about student loans. People are finding themselves very, very difficult to spend any kind of money. But now a lot of these manufacturers are starting to realize, they're starting to see the writing on the wall that customers don't have the money. As a matter of fact, I was down at a few dealerships this week. I was poking around trying to get some pricing, and I saw some really disturbing trends. I saw vehicles, a brand new Honda Pilot that really should be an affordable middle-class lunchbox Joe type vehicle, but yet they had a highly spec'd out Pilot in their showroom for almost $70,000. We've seen the similar trend with the Volkswagen Atlas. Now comes with a 4-cylinder engine. Really shouldn't cost this kind of money, but you can pay well into the 60s for that. Even a Toyota Highlander, nice little third row SUV, one of the most popular on the market. And even pricing those vehicles, they start around $53,000 Canadian plus taxes and extras. By the time you spec them up, tax them out, and out the door with your premium models, you're going to be paying in the mid to high 60s for one of those vehicles too. So it's clear that not just are the truck prices out of this world, but a lot of the mainstream vehicles that don't get the limelight are also priced way too high for the average consumer. But guess what? There's been good news, and we're starting to see the trends starting to turn around. We're seeing lots of changes in the used car market with prices dropping off drastically. That's right, we're only about 19% higher than we were in 2019. That's right, we've retracted substantially from the peak that we saw back in February of 2022. We've dropped drastically since that point, and we're starting to see the writing on the wall by a lot of these car dealers, where you're walking into the dealerships and you're seeing a vast amount of salespeople, but not too many customers. There's not a lot of foot traffic. People aren't buying vehicles these days, and the dealers, the OEMs know that. We're not only seeing used car prices fall off the cliff, but we're starting to see that downward pressure on new cars as well. And not just with the new car incentives, we're actually seeing some of the MSRPs start to level off, and the motivation for a lot of these dealers to start pushing their product. Now people are stuck, they're snookered, and they're waiting for a break. And there's still some manufacturers there that are offering 0% or 1.99%. We know that 0% or 1.99%, that just gets absorbed from the base MSRP, the sticker price. That just shows how much buffer they have in there. They want your in-house financing. They want you to sign up. But the reality is, with the Feds and the Bank of Canada, the rates are still much higher than that. And realistically, most banks are going to lend 2% above prime. So that basically means that to pay 5.9, 6.9, 7.9% is probably realistic. So if you're paying 0% or 1.9, then that's actually coming out of your cash price. So if you're getting that better pricing, obviously on your interest rates, that means they're going to charge you a much higher cash price for that vehicle. So watch out, those are traps. So according to the Consumer Price Index, we've seen in the month of August, prices start to slide more aggressively. We're starting to see prices very closely approach to what we saw back in 2019, which is a great response for a lot of people that are looking at buying. Everybody's getting tired of getting shystered. Everybody's getting tired of getting ripped off. And it's the writings on the wall. When we're looking at manufacturers like Stellantis, they can't sell their Jeeps. They can't sell their Rams. They can't sell their some of their Dodge products. They're not selling their vehicles very quickly. And with day supply up 100, 120, 130 days supply, it's pretty obvious the numbers tell the story. There's been backlash where now we're seeing Stellantis dealers reaching out and saying and blaming a lot of this hardships actually on headquarters, on the CEO, Tavares. And they're saying, look, you're not giving us a home game advantage. With these high prices, a non-competitive product, people aren't buying these vehicles, and now sales are plummeting. So owners of a lot of these dealers and these franchises are getting very irate, and now the feedback's coming out in public. Now you've got the Stellantis CEOs barking back and saying we shouldn't be washing our dirty laundry in public, but now it's gotten to this point. And realistically, people are starting to see the writing on the wall there. The quality's not there and the pricing's not there. But these dealers have nowhere to go but down, because people aren't having it. And to drop the day supply down, you're going to need more than just a $2,000 incentive. We're actually seeing a lot more aggressive price adjustments and positive pressure coming down from new car sales. And that's a big impact, because as we're pushing down new car sales price with incentives and MSRPs and more likeliness of negotiations, then that's going to have a positive impact for you, the buyer looking for a late model used vehicle. Because you're not going to buy a late model used vehicle with 30,000 miles on it if you can spend $2,000 more and get yourself a brand new vehicle with full warranty. No. So obviously that's going to push down and bear down on the pricing, obviously on late model used vehicles. And as those push down, that's going to start to push the old junk, the clapped out, worn out, 10-year-old, 12, 15-year-old vehicles with 200, 150,000 miles. It's going to push those even further down. So this is all having a positive benefit for the buyers. The consumers are starting to see a win here. So we've seen used car prices just in the month of August alone drop about 1%, or they've actually gone down 10.4% since the same time last year, a clear indication that we're starting to fall off the cliff with these prices, and we're getting much closer to 2019 levels. Now, brand new vehicle prices are staying relatively unchanged. But a lot of it has to do with the fact that we're seeing a lot of incentives, and obviously MSRPs have been creeping up. So then why are we seeing prices level off? That's because incentives are driving and offsetting that factor. Incentives are helping the market. But we're going to have to see a lot more push from the top to get people to get them in the door. And when I was in the dealership this weekend, or multiple dealerships, I didn't see a lot of customers buying. I saw a lot of salespeople, a lot of push, a lot of, them hustling, rustling, bustling around, trying to get you keys, show you this, show you that, which is great. It's moving back, not just the pricing, but if you look at the 2022, specifically at the peak in February, we saw dealers that would act very coy. The salespeople were arrogant. Salespeople didn't care about dealing. They knew you were going to come to them, but we're seeing these characteristics changing. Now as you walk into the dealership, they're giving you the time of day. They're offering you that beverage. They're grabbing 4 sets of keys to show you all of those vehicles. They're taking the time to show you the features. And trust me when I say this, 2 years ago, you couldn't get that type of service. They didn't care. They knew if you didn't want that car, the guy behind you was going to buy it. And they treated you like dirt. And that was my experience. But things are turning. The service is actually getting better. Because there's less people coming through the door, we're getting much better service now too. That's the beginning of this train. And we're going to start to see prices fall off here too. But on that note, we actually have seen some prices drop in the new car market. We've seen about a 1.2% drop in August compared to the year before. So we're starting to see this rolling over the cliff. New car sales are petering out. There's less people buying these days, and certainly less people that can even try to afford it. There's a lot of people saying, look, I'm just going to fix my old heap and I'll keep it going as long as I can, because a lot of people are just waiting for those interest rates to come down. I'll give you an example. I was pricing out a new Mercedes GLB, little SUV. You can get an optional third row. It's their kind of subcompact SUV. It's a little square box, very utilitarian. I was looking at their lease rates, and the lease rates are fairly high. The worst part is on a 4-year lease, you end up paying $1,100 Canadian, or almost $1,200 Canadian per month with minimal dollars down for 4 years. You do the math on that, that's about $55,000. But guess what? Sticker price for that vehicle was only $58,000, $56,000, $58,000. So basically what they're saying, the message is, you take that Mercedes out for a 4-year lease, by the end of that 4 years, you might as well toss it, because the dealers won't take it back. You've pretty much purchased it outright. So you might as well buy the vehicle rather than lease it. But not every vehicle is in that same predicament. We're seeing other changes in other markets. Toyota has a much better residual, and I was pricing out some of the numbers there, with the Highlander being it's a third row as well, slightly larger than the Mercedes. And you make your monthly payments, $800 a month, $900 a month for 4 years, 3 or 4 years with similar monthly rate. But at the end of that, you actually have a substantial residual, or you just buy it out, sell it for actually more than that residual is going for from Toyota, because historically they hold such great value. So there's some good buys out there and some terrible buys, and you really have to shop around right now is what I'm finding, because no two dealers are alike, and certainly no two manufacturers are alike. So we know what was going on back when there was that shortage. Back in 2021 in June, July, we saw a 40% increase in the price of used vehicles because there were such shortages, and it was catastrophic, and people were willing to overpay for a lot of that junk, even high mileage junk, even cars that had scratched rims, dented fenders. People were overpaying for a lot of both new and used vehicles because of the shortages. But if we look at 2022, the peak, which was in February, roughly February, March, was when we hit the all-time high. Now, compared to today, we've gone down about 20.1% on the average used car price in these short couple of years. So while we gained 40%, we've gotten more, almost half of that back in a short period of time, just because the market is starting to soften up quite drastically. And that's the signs and the symptoms are great for somebody looking for a used vehicle these days. Now, you're probably thinking the automotive industry is one of the biggest culprits for inflation. Well, based on the Bureau of Labor Statistics in August of 2024, we pull up some really striking numbers. So it's not shocking that we've seen car insurance rise through the roof. And that's a big part of the cost of living crisis, is just affording to own and operate a lot of these vehicles. We know with the pricey parts and components, battery replacements on electric vehicles, and the high cost of just ownership in general, and the fact that there's been excessive numbers of thefts in the industry, means car insurance has gone through the roof. And in that 12-month change, we've seen a 16% increase in the inflationary rates for the month of August due to car insurance. One of the biggest changes, negative impacts on you as the consumer, that you're paying way more than you ever have for car insurance these days. Rent and housing is between 4.5% and 5%. Groceries is actually about 0.9%, surprisingly enough. And transportation and brand new vehicles are actually retracted 1 and 1.2% respectively. Quite interesting, actually. But none of that should come as a big surprise, because those numbers are telling the story. We're actually seeing this decline. We're turning back the table, and we're starting to gain some of that traction back in the price of these brand new and slightly used vehicles. But recent data now shows as well that we're settling out on new car prices as well, which, sitting currently, pulling this data out of the thin air, we're starting to see about $45,000 as being the average transaction price. But based on Kelly's Blue Book, the average transaction price for the 11th straight month in August was about $47,870 and was about 0.6% less than the month of July, which was actually at $48,166. So we're making up ground. The average transaction prices are logged or cataloged as going down. We're seeing it month over month. We're certainly seeing it year over year. New car prices are dropping. Some of it's because of some of these incentives. Some of it's because of inflation. We're just seeing the overall prices drop. And this is a win for the buyers. Used car prices, much bigger hit, because as we see more used, brand new vehicles hit the market, some of those used vehicles are trading in, coming off leases, and there's a larger inventory, a bigger supply. And that just means more available product. And of course, that drives prices down. It's all a win for the buyers. Now, Kelly Blue Book's also reporting that they're seeing some of the highest levels of incentives on these transactions. August reported about 7.2% on the average transaction in terms of incentives, up from the 7% that we saw in July. So these are some of the biggest numbers that we've seen since back in 2021, a clear indication that it's taking incentives to sell these vehicles. But whatever it is, it's moving metal and people are buying new vehicles. Edmunds is also reporting that 3 out of 4 customers are actually waiting around for interest rates to drop down to between 0 and 5%. They want that lower single-digit number. Whereas 6 out of 10 people have actually purchased cars this or last year at the much higher rates of 6 to 12%. Sadly enough, people have just dug down deep and spent their hard-earned dollars and now are rooked in, and a lot of them are negative equity. So if you bought a year or 2 years ago, you probably got hosed. But this is where people are starting to be a little more conservative. A lot of people are waiting and watching what the banks are doing, the reserves, the bank interest rates, and the Feds, what the plans are for interest rate changes coming up. But people are waiting very cautiously, watching what the New Year 25 prices are looking like, what the interest rates are looking like. And there's a lot of people just waiting with money in their hand, waiting to buy, but not jumping to the ship yet like they were back in February of 2022. The signs are there. The market is crashing. Used car prices are dropping off a cliff. New car prices are trailing off, and a lot of it has to do with the incentives, but people are obviously not buying. Inventory, while it's not rising anymore, it's holding stable. But these dealers are still having to move metal, and they know with the 25 allocations coming down around the corner, they know that they have to continually incentivize these 23s and 24s that they still have hanging around. As a result, you're going to see more and more deals, incentives, price drops, cashbacks, all kinds of great opportunities to get yourself a great deal. But don't be hasty. Don't be paying what they're asking. When I went into a Toyota dealer here this last weekend, I asked about how much for the new Toyota 4Runner, and he actually said, look, yeah, they stick around $58,000 Canadian, but they don't go for that because they're hard to find, so people are paying, we're usually charging $2,000, $3,000 more. I said, not this cowboy. The heck with that. I'm not getting snookered into that. As a matter of fact, I'll be looking at knocking prices off of sticker. I don't care what kind of vehicle it is, and no one's playing that game with me anymore. So there's still a few dealers out there and salespeople trying to play those greasy games. Don't ever be stuck paying these market adjustment fees. That is the biggest scam this side of the Rocky Mountains. And if you do, well, Lord help you. Anyway, I'd love to hear your thoughts, right? Check that video out. More on the cost of living crisis and what Stellantis and Jeep are going to do there. It is getting ugly. There's a lot of mudslinging. Hope to see each and every one in the next one. See you real soon. Bye-bye.